Hey, welcome to The Explainer. Today we're going to get right into the mind of a day trader. We're going to dissect the high-stakes, split-second decisions that can flip a losing day into a winning one. Let's get into it. So that's really the big question, isn't it? And it's not just about charts and numbers. It's about psychology, it's about discipline, and it's about having the guts to admit when you're flat out wrong. We're going to follow one trader's journey through this exact process, all inside a single trading day. And this is where our story kicks off. It starts with this one simple, confident conviction. At the beginning of the day, the trader looked at the market and decided, okay, prices are going down. This one idea shaped their entire initial strategy. Right, so every pro trader, they start the day with a game plan. You can't just jump in blind, right? You build a hypothesis based on what you're seeing. And in this case, the trader's plan was built on a bunch of technical signals that were all pointing in one direction, down. So what's really interesting here are the clues he was looking at. He saw two main things. First, something called an SMT, a smart money technique, which kind of suggested the big institutional players were selling. Second, the price had hit what's called a fair value gap. Think of it like an imbalance in price that the market usually wants to fix. To this trader, these were blinking red lights. The plan was crystal clear. Short the market and bet on it falling.
Okay, so let's make sure we're all on the same page here. Bearish just means you think prices are going to drop. Just think of a bear swiping its paw down. That's bearish. The opposite, of course, is bullish, expecting prices to go up. But for our trader this morning, everything was seen through this bearish lens.
Okay, but this is where the plot thickens, because as any trader will tell you, the market, well, it does what it wants. A perfect plan can just fall apart in minutes, and that is exactly what happened next.
So our trader is waiting, right? Patiently. The market starts to dip down, but there's no really clean way in. Then the price bounces back up into an area that, according to the plan, should have been a hard ceiling. This was it, the moment to pull the trigger. He enters the short trade, and for a second it looked good, and then, bam. The market does a complete 180 and just shoots up.
And there you have it, a $200 loss. Now that's not just some red number on a screen, That's the market basically screaming at you, hey, your big idea, it's wrong. For a lot of people, this is where panic and emotion take over. But for this trader, it was just information.
And honestly, this right here, this is the most important part of the whole story. It's that moment of truth when what you think should be happening crashes head-on with what is actually happening. This is that moment that really separates the pros from the amateurs.
And this quote, man, it just perfectly captures that mental switch. The trader realized, wait a minute, if the market was really bearish, it would have hit that level and dropped. It would have respected it. But it didn't. It blew right past it. It disrespected the bearish signal. And you know what? That one piece of action was way more powerful than all the analysis he did that morning.
So you really see the clash right here. On one side, you've got the expectation. Price hits the ceiling, it should fall. But then you have reality. The price just plows right through that ceiling and keeps on climbing. The trader had no choice. He had to ditch his expectation and start trading the reality that was unfolding right in front of his eyes.
So this forced a total 180 in his thinking. The trader was now bullish, and as we see here, that just means expecting prices to rise, kind of like a bull thrusting its horns up. The old game plan, totally out the window. Time for a new one, right now. So, armed with this brand new insight, our trader didn't even hesitate. Didn't sit there moping about the loss. Nope. They immediately started looking for a way to act on this new bullish idea, completely flipping their strategy to get in sync with the market's real momentum.
All right, so let's look at the before picture. This is trade number one. The bias was bearish. The move was to sell. The outcome was a loss. This whole trade was built on that first idea, the one that turned out to be wrong.
And now, the after. The bias completely flipped to bullish. The move was to buy. The key signal wasn't some complex prediction. It was just a reaction to what the market did. And the outcome? A profit. A trade that didn't just wipe out that earlier loss, but actually put him in the green for the day. Incredible. So what's the big takeaway from all this? I mean, this one trading session, it's like a masterclass. Not just in reading charts, but in the pure psychology of making decisions under insane pressure. You see, the real edge here wasn't about being a fortune teller. It was about having a plan, sure, but being ready to throw it in the trash in a heartbeat. It's about understanding that what the market is actually doing is the only truth that matters. It's trading with a clear head based on that truth, not on ego or greed. And maybe the biggest lesson of all, realizing you're wrong isn't a failure, it's just new information. At the end of the day, being adaptable in this game is so much more valuable than just being stubbornly convinced you're right.
And that kind of leaves us with one last thing to think about. We're drowning in charts and data and analysis, but it all boils down to just a few critical decisions. And what this whole story shows us is that maybe the most valuable decision you make isn't the first one. It's the one you make when you realize you've got to change your mind. So, in a world drowning in data, what's a decision like that really worth?